One.
Okay, traders, investors, a little bit of a sell-off yesterday on some hot jobs data. Will that continue? We'll find out first at 8:15 what Putnam has to say about the inflation data. We got some Alzheimer drug news. We only got one earnings report. It's Friday. It's pre-market prep. Let's get going.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, team, I'm coming in here. Let's take a look at the charts today. Sorry, we don't have the classic Joel charts today, but we'll take a look at the SPY here. SPY kind of coming down a little bit since the close. We'll see if we get a little bit of a pop yesterday. Definitely saw a little bit of a decline. We'll look to see, of course, on oil, if oil can continue a little bit of the climb. Oil stocks going down, but of course, WTI kind of up there by 72 yesterday. We'll see if it gets back above that clear 72 spot that we've seen some resistance act there. GLD back up. Will gold get a little bit of a lift today? So we can take a look at maybe if gold and silver can push up a little bit higher. Bitcoin, of course, we'll see if that can continue. It has been pulling back. I'm taking a look at Bitcoin. Mara stocks like that have continued to climb. Can they go higher? We'll find out. Let's go ahead. Let's bring on Dennis Dick here. We got, of course, Joel Elkanin. He's on the road, so you guys see it's not the classic setup there, but he's here with us, so smash the like. How we doing, guys?
Not too bad. What's going on, Money Mitch?
What's going on is yesterday a little bit of a pullback in the market, but towards the end, we just went right back up. Buy the dippers coming back into this market. What did you see in the after
sectors, hours? Again, predictable that on tech stocks, there's just this relentless buy the dip mode. But on other stocks, it's not as pretty. I mean, that IWM was a serious sell-off yesterday. And yes, we did bounce, but it's still within a range. We've been in this range for the last month. It's 187 down to 180. We got close to it yesterday, 180.72. So you got towards the bottom of the range and you found some buyers there. But it is concerning still that value can't seem to hold and can't seem to get going. So we're still being driven by those tech stocks. That's what's holding us up here. We need value to eventually participate for this market to continue its leg higher. Joel, are you with us? He's remote.
I'm with you.
He's with us.
Not letting you guys steal the show. What I talked about yesterday and a few days ago is we know where the resistance is, right? Mm-hmm. We pounded up against 4,500 and the S&Ps 2, 3, 4 times. We weren't really clear where support was. Came down hard yesterday, found some support. So I feel you got a good, even though it's only one daily low from yesterday's low. I think that's where the bulls have to, draw the line in the sand. And, if this is if there's another major leg higher here, we got a clear, triple top, quad top to clear. So it's a setup. It's a wide range in between it. I'm looking at the close in the S&Ps. That's been holding as resistance in the pre-market. So a lot of things are going to change at 8:30. If you extrapolate from the numbers yesterday, it's going to be hot. Right.
That's the problem. And that's why we were down yesterday. It wasn't even so much that the ADP was hot. It was the fact that we got the jobs number coming. And that's like, a pretty good indicator on that it could be hot as well. And we know they're looking at the jobs.
So and not only the jobs, right?
What's that, Money Mitch?
And not only the jobs, but it did hike the CME Fed tool a little bit higher towards that hike in the rates, right?
That's what's going to happen. I mean, it's, if the jobs are hot, that means the Fed's not going to cool off anytime soon. And that's what the market wants. The market wants the Fed to cool. The TLT is telling us that the Fed is not cooling anytime soon. Now below $100, we were concerned about that. eventually is going to be some talk about here 2-year Treasury, although that's on CNBC right now, 2 years at a new 16-year high at 4.9%. So, I mean, there is, competition for stocks here, but it's not only that, it's, every company that borrows is paying a little bit more money. Every person that borrows has a little bit less money to spend. Interest rates are the one thing that eventually you think is going to hit this economy. But, we know in Canada, the way they've gone around it, especially with the banks and the houses, I was tweeting out an article yesterday that we're seeing 70, 80, 90-year amortizations now in Canada. So, I mean, just insanity, because they've got these products that are created just to keep your payment the same. So as interest rates go up, it just extends out your amortization because you're paying more interest now than you are principal. So, I mean, some people in the cases aren't going to live 90 years. So you get your house at 20, you're never going to pay your house off if interest rates stay at this rate. Interest rates will eventually go down, but they're going to go down when we start to see this economy cool.
Well, the other big factor of inflation has been wages, right? If you got more people working, more people wanting higher wages, that's upward pressure on the inflation data. And then the other area of the economy that we wanted to see slow down, was the housing. That hasn't slowed down. We do see some of the commodity prices moving up here. So, the pause or the pause, cut. I mean, I just think those scenarios are off the table, or not off the table, but they're farther away. But what we're going to do, let's cover a few stocks because our man Blue Putnam, the chief economist at the CME, will be joining us here in just about 5 minutes. And there's no better person to talk to about inflation than Blue. So take it away, Mitch.
All right, so let's go to, of course, what at least was the talk of the town yesterday. It was all about, of course, Thread, and we'll talk a little bit about the competition now that has really gotten to another level. Let's just be honest. Elon Musk versus Zuckerberg. Who's going to win here? Elon Musk's attorney, Alex Spiro, writing a letter to Meta on Wednesday accusing the company of willful misappropriations of trade secrets. Will this actually kind of help Meta? A little part of me thinks by Elon's attorney actually doing that made everybody see like, hey, maybe this Thread thing is actually going to be something here to stay.
I mean, he's scared, and this is a desperation move. Like right off the bat, 2 days in, obviously knew it was coming. The lawyers were prepared, and now they throw it out there. I mean, this is desperation by Musk. And you know what? You go on this Threads, and I had to open an Instagram account to open a Threads account because I never had an Instagram account, but I am on Threads. It is true. I'm right there. If you want to show my handle here, I just tweeted it out there. I'm Triple D Trader, TRIPLED Trader, TRADR with the 3 Ds.
Have your link.
I couldn't get the Triple D Trader. Somebody already had it. So I had to add the DDD afterwards.
Tripled D.
Show it on the screen there, Mitch. Just my tweet.
I got you.
Just
give me 1 second.
You'll show it up there. But
here.
I broke down. I joined Threads. I was using it a little bit last night, just looking at it. This looks identical to Twitter, Joel. I mean, everything about it seems identical. Likes, the whole setup at the bottom when I look at it, your profile. I mean, this is just classic Zuckerberg copycat stuff going on here. It is literally identical there.
You don't like
there it is. Look, he's got me on there.
Trader?
There I am. Triple D Trader, DDD. Look at my profile pic. I took it last night right here. I went like this, just sitting back. And I went like this, haven't shaved or nothing.
Nice center. Nice,
Dennis. I was trying to get the pre-market prep in the background. So
all I can say was a good after-hour session.
If you zoom in there, you can see the premarketprep.com. I did that for you, Joel. that I went off-center just for you.
Okay.
But anyways, it's identical to Twitter, man.
Right,
Will Meta run today off of that, though? I'm starting to think yesterday was kind of the classic sell the news event.
And they got
I shorted. I shorted a little bit. And I was able to make some money yesterday on Meta. But now I'm actually a little bit more flipped. And I'm thinking maybe even along here today, as long as we can get a tech rally, right? A nice little push.
Yeah, it's all about the jobs number. But I'm just looking. I didn't get to see all the price action in Meta yesterday, and I'm just looking at it now because remember we talked about that psychological 300, level. And it did trade there. I believe it was yesterday in the pre-market. But right now, you got another good setup at 298.12. If you're really looking for more on the upside, another test of 300, you got an exact double top there, 298.12. And then yesterday, you posted the new closing high for the move at 94.37. So we're currently, if soft jobs number, they still try and rally. My focus would be 294.37. And then I want to give you a downside number. We had that quad top at 289.5, and we blasted through that on Monday. Or no, excuse me, on Wednesday. You blasted through that. Couldn't quite get it back down to that area. So 290 major support, and then double top. Let's see which way it goes. 298.12.
And it was down after hours last night, and I think the lawsuit was spooking a few traders there, but I don't think this is a big deal. I don't think one, Zuckerberg is going to care. I think two, I don't know if he's got a case or not. I mean, let's be honest, I watched that, movie on Facebook. What was it called? The movie,
Social Network.
Social Network. And, it sounds, if there's any truth to it, he pretty much ripped off that idea from those Winklevoss twins. So, I mean, but Zuck has ripped off stuff before. This looks completely like Twitter. It looks like he's just completely ripping off Twitter. That's just my opinion. But to me, it looks identical. So, am I leaving Twitter? No, I'm on Twitter. I just joined Threads just to see what it was all about.
What would your trolls do if you left, Dennis?
I'm not. Yeah, no, I have too many loving trolls and haters on Twitter to leave you guys. Love the haters. I'm staying on Twitter.
The truth is there's room for both. Let's keep going. Let's do a little quick one here. I think we won't have too much talk on it, but Biogen, of course, is getting a little bit of a move after shares resumed trading following after hours. It looks like we got a new FDA approval of an Alzheimer's drug that's coming out of Japanese drug maker, Alzheimer. And so what will this do for Biogen, guys?
Nothing, obviously, because it's already priced in. I'm long Biogen in the long-term portfolio, basically been long it. It was one of my first stocks I ever bought back in like 2002. I've been long like 20 years. Man, you'd think it'd get more of a pop than this. It really got nothing. Got up to 292, 293. I think, it was all priced in. It was expected, to a certain extent here, because we've talked about this approval for a long, long time. They had been leaning towards approval. We had the committee and whatever, talking about recommending approval. I think we kind of knew it was going this way, and I think the market knew it too. And that's why the muted response here. So those who were hoping for a 50 or 100 point pop on this are very much disappointed. I thought it could get to 300 on it. I'm pretty disappointed too as a shareholder that it got absolutely no pop on it. But I think it's just all priced in.
Yeah. And they halted it too, right?
I saw it was halted last night. So, and IBB was trading up on it last night too. So they were expecting Biogen to pop, because IBB, if you bring that up, because it was still traded up a buck. So they were expecting Biogen to trade up like 20, 30 points on the IBB action, because it's only, I think it's like 7 or 8% maybe in the IBB. I go grab that percentage right now. But, risk arbs were like, well, we can't do the Biogen. We'll buy the IBB off of it. Let's see how much Biogen is in IBB. Grabbing it right now, percentage-wise. Oh, it's less than that. Man, those risk arbs were really getting excited last night. It is only 3%. And they were only buying 3%. That up a buck last night. That's insanity.
Give me that money. I'll take it. All right.
You should have been selling that last night, IBB. So it's back down.
For you Biogen traders, I mean, it was quiet ahead of it. And, you did get that pop to 293. Triple D, I mean, I look at that spike that you had back in early 2021 when that thing went to 460. Man, oh man, it's done that a couple times. I just don't know if you're going to get a shot at that again until they get the full approval. And I was like, one of those times I thought, man, Dennis is out there and you weren't on that one, but you maybe get an opportunity. Shorter term.
I'm like married to this stock. I've never. I wonder when. I wonder when I did actually buy it. I know my average cost is in the 40s.
Man.
We never marry stocks, man. We know
the
that.
Don't go back far enough to see.
If not,
I'm pretty sure it was like mid 2000s. I bought that in Genentech. And it was back when I was in like the bright office at the Wyatt building with you. And I bought it was two of the first stocks. I wanted to get into some biotech. about that Genentech. I complained about the Genentech the other day.
We got Blue, Dennis. I'm sorry to interrupt.
Yeah, let's go, Blue.
Nothing, no
Bring 'em in.
Genentech. Let's get to it, guys. Of course, we got our guest. Smash the like.
Hey, Blue, how you doing?
Oh, good morning. Doing well.
Blue Putnam, chief economist over at the CME Group, joining us on the perfect day. Blue, where do we start here? I mean, we've known your position. It takes a while for inflation to come down. It's come down. It still things are hot under the hood with the jobs data and the PCE. Where are you at on things?
Well, the jobs data is definitely robust. I mean, you didn't need to know the ADP number. We've been doing good on job openings. They're elevated. They're off their peaks, but they're still pretty high. People are still quitting jobs voluntarily. They don't do that when there's a problem. So we know the jobs data is good. We don't know what the number will be. The ADP, if you could tell me the ADP number every month ahead of it, I'd never get the Labor Department's number right. It certainly supports the case that we're going to have a strong number. And, we've expected some good numbers on the job side because of just all the underlying coming out of the pandemic. The industries that really got hurt, travel, hospitality, things like that, they're still hiring. And they're a lot bigger industries than the ones that are laying off. I mean, Wall Street and social media, they get headlines, but they're not big, in terms of total number of people. It's not huge. So, we're looking at the kind of a jobs data that's going to support, what the market's telling us about rates.
Blue, let's just play scenario analysis because in 11 minutes we will get that jobs data. Let's say, hypothetically speaking, it comes in hot here. Does it change anything for the Fed? Do they get more aggressive here if it comes in hot? Or are they just, they're already kind of are aggressive and they just stay the course? What's the Fed speak after a hot jobs number if that occurs?
Well, I don't think much will change from Fed speak just because of the way Powell presented it after the last meeting and in his testimony before Congress. He's talked about, the dot plots having 2 more rate increases over the course of the year. He made it very clear that May was not a pause. They just simply decided not to raise rates, but they could still do it in, other months or June. So, I don't think the Fed speak changes so much, but I do think the Fed has an interesting debate to handle because they've raised rates faster than any time since 1981 and nothing's happened. Mm-hmm. And I think they have to look at their models and understand, why did we not understand that interest rates weren't as powerful as they used to be? They're going to have to come to grips with some of these big debates.
Yeah, definitely. I mean, their whole battle to inflation seems like it started well, but now starting to slow down, and we're not seeing the numbers jump down like they were. Of course, it's going to be a battle. Now, one thing that I'm concerned about, of course, is banking concerns, right? We saw capital requirements could be changed. What's going on in that banking situation, Blue? Should we be still worrying about maybe some regional banks still falling?
No, you shouldn't be worried.
That's good news.
The stock market advice.
No, it's not. The regional bank stock indexes have come off their lows. There's an awful lot of private equity money looking at the private credit space to make up for what's going on. We're over the hump on anything worried about the banking system. And the banking system is very well capitalized. There were a few banks that got in trouble because they were not diversified or they took very large interest rates bets by choice and they didn't work out. And those are just a few. So I think we're in very good shape on the banking system. We're in very good shape in the housing market. Boy, that's one of the more strange markets. But if you got a mortgage in the last decade, your mortgage is 3%. You're not giving that up to take a 7% mortgage. No. So there's very little supply of existing homes, which means if you do want to buy a new home, if you're a new homeowner, a young person moving up, you got to go to the new construction market. And the new construction market, well, that's actually doing okay. home builders, things like that. Again, stock market's telling us they're fine. So coming out of the pandemic, we have an unusual stock market for home builders because of the low rates for the last decade. We have an unusual job situation for hospitality because we're still coming out of the pandemic. And then, you look at interest rates and how fast they got hiked, and you say, well, we still should have had more of an effect. Well, you shouldn't, because guess what? In the last 15, 20 years, interest rate risk management has exploded. I mean, you may make a choice to take a bet on interest rates, but it's a choice now. It's not a business model. And financial institutions are not nearly as impacted by higher rates as they used to be. So the Fed simply doesn't have as much power as it used to have to fine tune the economy. That's, just got to get real about that.
Blue, I'd like to look at a couple things here in the bond market. I mean, the bond market is telling us, I'm looking at the 30-year futures, and they're just telling me, at least one hike, maybe two hikes, maybe three hikes. And the stock market continues to ignore that. Also, I thought it was a hawkish pause by him. And, everyone interpreted it different ways. So I don't know. Why don't people believe what Powell's saying? And why don't they believe the bond market?
Well, okay, let's start with the bond market. So the 10-year is at 4%. What's 4%? Well, 4% is a little bit above the real GDP rate. I mean, real GDP is probably only growing about 2%. So you're earning the real rate, and then you get a little bit of a premium there, or you take it from the inflation perspective. Long run inflation expectations aren't 5-6%. They're somewhere around 3%. So if you're getting a 4% yield on the 10-year, you're getting paid now for taking some inflation risk. I don't see anything, the market seems to have found a comfortable place there. Now, short term, the 2-year is a little higher, and then the 1-year, that's definitely telling us there's 2 rate hikes coming. I think the market is listening to the Fed, but it's also the longer term you go out, you've got to say, well, where does inflation really land? If it lands at 3% and the economy is a 1 or 2% economy, how do you argue much with 4% 10-year? I don't. Anyway, it's going to be volatile, but we found a comfort zone.
So more staying in the zone. And that's one thing I've been saying is, 4%, 5% that people can get on, fixed M and CD rates or whatever. Why is that bad for the economy? And everyone looking for super higher rates or the pause and the cut. I mean, wouldn't it be better off for the economy if we could just be at one stable level for an extended period of time?
Yeah, I think when we do our backward-looking research with our 2020 hindsight, we're going to really realize that the 2010 to 2020 period of zero rates and QE actually did some damage. It wasn't free, and it really didn't grow the economy any faster. It didn't grow inflation any faster, but it did grow the stock market, and it grew bonds, and so it created and it grew housing. So it created some asset price increases that maybe it shouldn't have. And it hurt retirees. It hurt people that depend on incomes. It hurt money market funds. It hurt some parts of the economy. And so I think when we look back on that period, we're going to want more of a balance between where the Fed chooses to put interest rates and where, our inflation is. I don't think we're going to go back to 2% inflation, but that's because I think that was somewhat of an accident, not an accident, but globalization helped keep prices down, and we're kind of reversing there. And technology, you guys talk about social media, but what really happened in technology in the 90s, 2000s was we learned to comparison shop, and that kept prices down. Now, AI and chat GPT and things like that, those are labor-saving technologies. They're not going to help depress prices. They might help profit margins stay up, things like that. And so you can see the stock market liked it. And then demographics, in the 90s, early 2000s, the boomers were in their peaks. Now they're retiring. So we got demographic headwinds. So, I don't think we go back to 2% inflation. I think we go back to more like 3%. And the Fed can get us to 2%, but only by causing a deep recession. And then after it's over, it'll just come back to 3. So I don't know. We're going to have a very interesting debate about what the long run inflation rate looks like.
Hey, Blue, do you want to stick around for the number?
Sure.
We'll keep our chief economist on through this number.
It might help us. It might help us.
I'm not. Hey, wait, Blue. I'm not paying you any more money. Okay. Don't get.
You're working overtime here, Joel.
Like, don't get that invoice out of the
Come on, man. You don't get that nice jacket for no reason, Joel. Come on.
No.
And where was the Blue intro? Where was
Mitch dropped the ball on the Blue intro.
I was trying to do the quick one. That one's too long. I wanted to hear the opinions,
Okay,
the good stuff,
Blue,
the gold.
This is when we lose. We'll lose Dennis here in a minute because he's gonna be making a market.
So I don't get run over.
Here's the routine.
But I'm listening to Blue. I'm not going to stop listening to Blue.
All right.
Well, I'm only going to. You're going to have to tell me what the number is. I'm not on my computer to pull up everything.
You're good. We'll
you're going to get excited. You're going to love this, Blue.
All right. Consensus right now for non-farm payrolls is 225,000, prior 339,000, of course. One thing that's going to be on my eyes is the unemployment rate also, right? 3.7 prior, consensus 3.6. One question that I even wanted to kick it to Blue. Will we ever see a 4% show up here? Like I think Jerome Powell has said multiple times that we might see that spike to 4%. Do you think that ever happens this year? Unemployment to 4%, Blue?
This year? Maybe not.
Maybe not.
In the next couple of years, possibly. But we're still coming out of the pandemic. We're not out of this thing yet. So we're still adding jobs in some key sectors.
All right, something definitely to look out for. We'll see when it hits the tape here. I'm also going to pull this to the right here and put my charts up so that we can actually see the price action here.
Yep.
Because normally we see it through Joel's charts, but I got you guys. I'm even going to put up the fabulous 1 minute chart here on the SPY.
Yeah, I got it up. I got my 1 minute up here too. Just let me give you. We never go to 1 minute, Blue, but we're going to do it here. Quick technical setup. Big number here. This 44.48. Ooh, all right, we're coming in here. The algo jumpers are leaning bullish. We're not getting the for 13 seconds here. We're making a new high. The official number.
Those jumpers.
Yep, the algo jumpers are out there, and they're getting the market green right now as we speak.
Non-farm payrolls coming in for June, 209,000 versus 225,000 estimate, prior 306,000. So under the estimate here at 209,000 versus 225,000. So not too bad there, about 16,000 off the estimate and a little bit under that outlook. Unemployment rate coming in at 3.6 versus the 3.6 estimate. So not moving a hair off of that estimate and dropping a 0.1 from the prior reading of 3.7. All right. Those are the numbers. What do you think, Blue? Pretty much in line there.
Well, they're in line with a lot of things, but they're not in line with ADP.
That is true.
So, like I was saying earlier in the show, you can tell me that number and it won't help me. In fact, it might hurt me. But, these numbers are pretty much on trend. And so they don't give us a lot of new information. But if you were scared yesterday, you're not as scared today. But I don't think it changes the Fed's behavior at all. They were poised. Powell has much signaled that they were thinking about these rate hikes. The robustness of the job market will support those people on the FOMC. But then they got to start thinking about what we were talking about earlier, is maybe the job market should be pretty strong here because we haven't come out of the pandemic fully. And we've got a housing market that's, very different than in the past. So a lot of good reasons why this economy is still hanging in there.
Okay. All right. Yeah, I'll wrap up the price action. We got a little bit of a pop here. We made a new pre-market high. Feel like you still got a little bit of, little selling pressure. Blue, real quick, inflation numbers coming up a little bit later in the month. We hope to dial you up for that. Any expectations for that?
Yeah, let me do a quick warning on those inflation numbers. The headline number is a year-over-year number, so what happened back in June 22 is equally important as to what happens in June 2023. Now, markets don't think that way. I mean, people like me and you guys, the more recent data is way more important. But the headline number is going to go down just because we know June 2022 had a 1% increase. So we know that. So we're going to get down into the threes based on what we know about last year, nothing about what I know about this year. And after that, however, the August data release, that'll be the data for July released in mid-August. That headline CPI is going to bounce up a little bit. Again, that's a view based only on what happened in June, July, and August of 2022, because that was the peak. June 2022 was the peak of the inflation. So we're just changing our year-on-year comparisons. And so my warning is don't get whipside by a low number in July and then a high number in August. It's all noise from a year ago.
All right. A word of caution from Blue Putnam, and he is the chief economist over at the CME Group, keeping an eye on inflation for us over the past year and a half, better than just about anybody else, Blue. We'll be dialing you up real soon. Thanks again.
Thank you.
Thank you, Blue. All right, let's get back to the market. Let's take a look here. Dennis, not much action, but a little pop there.
A little pop. It was not hot. So I think the market applauding that, and the nervousness yesterday, to Blue's point, you know, they're going to be, if you were nervous yesterday, you can be a little less nervous here today because that ADP number was hot. This was not. This was soft. So that's good news. If you're thinking the Fed's watching this jobs very closely, you're starting to think like, well, this is, you know, a little bit more of the, you know, like to put them to like the one and done camp. And I don't know if I'm in that camp or not, but that camp will reopen here today, the one and done.
Does this push the tech trade a little higher now? As
definitely. And this is what we're seeing in the price action here is tech is taking off here. So tech was down here ahead of the number. That has clearly reversed. QQQ is leading the way here. You can just look at across the board. Meta up $2.81. Nvidia you're showing right now is up $4. Across the board here. Netflix up $2. Microsoft Apple up $1.50. Tesla, which was red by $1, is now green by $2. You're seeing money come to tech. ARKK, always a proxy for growth. The zombie, they like that, you know, with the possibility that interest rates might slow down, or the Fed might slow down a little bit on their, you know, obviously their outlook here. 1% up on ARKK, so big price moves here in technology.
Interesting too, what Blue is saying, you know, regarding the numbers moving forward, the actual inflation numbers, and where the Fed is kind of leaving us hanging here a little bit is coinciding with those numbers coming out in July and coming out in August. So, you know, the Fed's well aware that the comparisons are going to get, you know, a lot harder. But the other thing was what he was saying was about, you know, the ADP number. If you're out there slamming bids on the ADP number, you know, instead of having bids out there, you know, it's,
are you lifting offers on this jobs number? You were slamming bids on the ADP.
There was no flinch to the downside. The algo
flinch. Yeah,
the algo jumpers, they had it green. They had it up 4 or 5 points
in a millisecond.
That ADP
as soon as that number came in light.
That one had a tendency.
So does this mean we just get back all the losses from yesterday, or is the market still spooked? You know, because it was definitely the ADP, and obviously, you know, this talking, but the interest from yesterday is definitely that hit the market yesterday. Do we get those losses back here today? I'm not so certain. I think you still have a few people in the camp that, you know, profit taking. Get this little pop here. Maybe I, you know, sell off. And then there's the other narrative here too. I mean, you can always find the silver lining if you're a bear here as well, and say, hey, jobs, you know, not doing as great here. Maybe this economy is starting to slow down. So
the unemployment rate staying at the same percentage. If anything, going down 0.1 would, I think, knock that out. And so it just shows how resilient our economy is, I think, if anything, right? And so to me, this still leaves room for the two more interest rates, right? 50 basis points more to go to, 25 basis points probably in the next meeting. And then maybe, who knows, what happens there. But I think that at 91% chance it was this morning. We'll see if that changes, gets back into the 80s. So that's one thing that I'll be looking for on the CME Fed tool. But like, let's say pullbacks on stocks that like come back on the hourlies, they just keep getting bought up. Like the Apple was pulling back yesterday, and it just had that nice support around 189.50s, came right back up. It just seems like these stocks don't want to stop. So even stocks like NVIDIA, right? Really weak yesterday. Well, look, it's right back to 424. I don't want to get in front of these trains, and you got to be careful. When you're getting these downside actions, they're not continuing. They come down really quickly, but then just come right back up.
I think the most interesting, technical take since the expiration, and time will only tell the real answer. But that expiration high, we got really close to 4,500, right? We were ready to break out, and then they took it down. We drifted down, under 4,400. We took it to 4,370. Well, we went up there again, right, at the end of last week and earlier this week. We didn't come anywhere near last week's low at all. The low for the week stands at 1950. So after that first, pretty good decline off the expiration high, this pullback was much more shallow. And we always talk about, building momentum, getting through a big area. Well, if you tack on 15, 20 handles today, you get a new closing high for the move. Then, you only need to move 20 handles to bust through the paper. But, it still feels like a lot of people are like the market today is like, well, I didn't sell yesterday, but I'm getting a little bit of a pop here. Maybe I'll look to lighten up.
There could be some people who were spooked yesterday that will use this pop to sell. So I'm not in the camp that we get all the losses back from yesterday here. And I actually think you're maybe lightening up into it. And, I don't want to be the bearer of bad news and, bear on this show. I just mean we've had a great run here.
Great.
It's been a great run for a lot of stocks here. I mean, a lot of we were talking yesterday on the show, Joel, about a lot of stocks like, your upstarts that have won run, and these are companies that have been struggling for a long time. From 15 to 36 in a month and a half, it's up 150%. I mean, these aren't your blue chip like mega caps that are just killing it. Even ARKK, which holds a bunch of junk, has had a really good run, which we called on this show. But that candle yesterday makes me nervous, and you get a little pop back, a check back here today. Maybe you're selling this thing in the high 43s and just saying, thank you very much. It's been a good run, but I'm going to sit on the sidelines until I get more information. And it's okay to sit on the sidelines. I mean, that's the one thing. In a 0% environment, it really sucks sitting on the sidelines. But in a 5% environment, it doesn't hurt as bad sitting on the sidelines. It doesn't hurt as much.
I think Kathy has a pair of highs to keep an eye on at the same area. I just want to looks like from the last two sessions that not the two prior sessions, top it out into 44 handles. So got a good number. A lot of times she makes the turns off those double tops and triple tops. So that's what you got. You got bogeys. You got for the stocks that you're trading. We just slipped red here, Dennis. Yeah, we just slipped red. Yeah. I think for the Bulls, the onus today is to close this green, to close this over, this 44.50 area. And I think for the Bears, I mean, you take out yesterday's low, and then you got people selling in the weakness. So I think I'll say, the Bulls and the Bears got the work set up for them today.
Yeah, I'll be watching at least SPY gap. There was a gap there, and maybe it holds around that level. A high there, 438.28. I'm going to be looking for that to kind of hold in there. We'll see what happens on the SPY. Let's get to some more stocks here. Let's go to Levi as they reported their earnings. Let's take a look here. That's coming down to $13. EPS coming in at 4 cents, beats the 3 cent estimate.
Wow, we're getting head hard now.
What's going on?
Sorry, Mitch.
No, you're good. Let's take a look.
This back to the S&Ps here because we stopped another 5 handles when you were speaking for like 10 seconds. There, I mean, this is good trading action here right now. So fake out. It appears, and again, tech holding up. QQQ is trying to hold up, but I'll tell you what's rolling over is the IWM is getting slammed right now. So they're hitting the value stocks.
Yeah, there you go.
They're hitting. You try to make sense of it all. And like I said, there could be, a few people saying, hey, well, jobs starting to slow. Maybe this economy's starting to slow, and that's not good news. So you can take the bull and bear thesis from any number here. You can find the silver lining if you're on either side here. It's somewhat concerning, the price action from yesterday, and now this is really concerning because this was a good number if you thought the Fed might slow down, and now you're immediately giving it all back. The gains only being held for 10 minutes here. Very concerning.
Like you said, like sell it into strength. Like you had that opportunity when we were close to 4,500, and then yesterday was a day where people were really selling real. Wow, whew, boy, here we go. We're going to take out the pre-market low here in a second. The pre-market low is coming in at 34.50.
Guys going down faster than the Qs here, that's for sure.
Is there anything going on? Is there any other news? Is just all of a sudden people listening to pre-market prep and saying,
yeah, they're nervous.
Look at this, nervous Purvis. I just wonder if anything else came out.
No, this is just chop. So what you've got here, and I can tell you about this price action, is you had a lot of algos saying, oh my gosh, green light, go. The jobs number is light. You had probably some people doing the same thing. And now those traders are all caught. Those traders who just bought in the last 10 minutes are all caught. And we warned about this when we were green. We're like, this could be one of those, Joel was just saying, it could be one of those profit-taking types of deal. Now they're caught. And people are like, wow, I did not see this coming. The jobs number is light. What do you mean? The Fed is going to cool them off. And now the question, they're like, well, the market will come back. The market will come back. Bears just gained some control here, folks. Bears
CME
gained some control.
CME Fed tool jumping to 92.4 from 91.8. Not the biggest jump right there, but also just showing more and more 25 basis points in July's meeting, right? That's going to be the 26th of July. We're not too far from that, right? I mean, 20 days out, a little lower than that, 19 days out. We'll see what happens. SPY
Mitch,
definitely
pull up the TLT
action. Let's go to the TLT.
But yeah, pull up the TLT. I mean, you know, Dennis,
on the 99, rejecting the 100 move.
Yeah, I mean, this thing is back, almost back to its 22 lows. I don't know.
Not looking good. Not looking good.
It looks like the market is starting to listen to the bond market a little bit here.
Below 100, we warned about that too here. So.
And what has changed though? Like, if you guys think that, yeah, maybe the markets are coming back down, is it just, do you guys think this is just a pullback, or do you think that there's something that's actually like changed in the narrative? Like, is this AI coming to an end? No, right? I mean, is this just a tech pullback?
We're in a pullback here. I think there's so many uncertainties though, with like the whole thing. AI. So let's just give a perspective. The whole entire rally was driven by this AI talk. This was driving not only those 7 stocks, it started driving the overall market. People talking AI is going to make everything more efficient. We're going up. But, you know, there's always been the case. Stocks are not historically cheap here right now. Interest rates are historically high here right now. And eventually that could end up showing up in the economy. So maybe today people are like, maybe this is actually showing up in the economy. Maybe it is going to start to slow. Maybe if jobs are starting to slow, maybe this is a sign that we could go into a recession. That's the bear narrative here. I think you're still in a battle. I still think overall, you know, you're still in an up tape, but I'm just saying the bears have a case here now. So, and if you're sitting on a lot of profits, why wait around to find out? Why not book some of those profits? It may not be a bad idea.
You got a great area. I mean, you gotta, you know, even up here, like you're split 44.90, right? 44.80, 44.70. Here, you know, you are still so close to the, you know, to the recent highs of the move, and still, you know, close to the closing high of the move. I'd keep an eye on those levels. You know, if you're looking to lighten up today, see how far away you are from that. But right now it's seen red. You know, the green to reds happened pretty quickly. Pre-market low 34.25. I don't see anything underneath that until we get to yesterday's low at 1950. And after that, you know, who knows, 4,400.
Yeah, the reason I just bring that up is that, you know, I've been thinking about it, right? What turns around this AI bubble? Is it, you know, concerns on valuations? I don't see that as the turning point right now. And I mean, of course, everyone's calling out the valuations like NVIDIA that's, you know, ripping through the moon. But the truth is, I don't think that that's what's turning around this party. So it could just be a little bit of a pullback. We'll see what happens. I mean, weekly numbers seem to be holding, right? And I think that that's a good outlook there. Joel's talking about it. This is the pullback on the weekly. Is that really massive? I mean, not really. So we'll see what happens there if we get a deeper pullback. Let's go to
what turns around this party will be a change of trend. And that is what the bears have not had. They've never got this downtrend cook in the Qs or the SPY. It's never been broken. It's still not broken here right now. I would argue if you bring up the SPY, probably below 430, you start to look like, ooh, you could be breaking trend. So you still even have some room where the bulls are in control. The Qs are probably breaking trend. It's somewhat concerning, Joel. You're probably going to say this too on the Qs, that we did not make a new high on the move. It's somewhat concerning. There's a case for a double top here. There's a case that we topped out back on the 16th at 372.85 and then 372. So there's a case on the Qs. I think the S&Ps may have just ticked. No, they kind of did too.
They did too, exactly.
Yeah, there's the case for a double top here right now. And me and Joel have used that technical analysis and focused on, that's one of our main things, is double tops, double bottoms. We've used this in our trading, and when we call a double top, often we get 2 consecutive days. But what we're talking about in a double top is not even consecutive days, which we had. We actually have it coinciding from 2 weeks ago as well. So there's some concerning stuff. Couple that with the fact the stocks aren't cheap. Couple that with there's a lot of people sitting on a lot of gains from this year. That could equal a correction.
Well, and when does that coincide with that exact day that you're mentioning? The 16th is when you had the quad witch, and we talked about how on that, the expirations, a lot of times they could signal turning points in the market, either a strong continuation of the trend or a reversal. That day you got the 93.75. Now, I believe last Friday, I can't remember what the catalyst was, is we popped up to 44.98. So he exceeded it a little bit. The following day, 44.94. The following day, 44.93.75. So if you want to throw a quad top scenario, that's in there as well.
Yeah, I think we just got to continue to watch this kind of bottoming support line on the daily. That's what I would look at least as a technical analyst there.
It's all about yesterday's low. I agree.
Just watch that level, right?
If the bulls, because I'm not going to worry about last week's low. If they make a higher low than yesterday, you defend yesterday's low, maybe flat on the session. Then you got it. Bulls, that's your low for the week. That's your weekly number. That's what the bulls have to do. Defend yesterday's low.
And we're not saying so. And Joel's making a good point. The chats, as soon as I even give a hint of bearishness, the defense comes out. And they're mad. Don't be so bearish. Out. You're giving scenario analysis on this show. I'm still kind of neutral. I'm half cash, half stocks, trading neutral because it's a tough market to call. This has been a tough market to call for a long, long time. I've been trading market neutral and trading portfolio neutral. And by portfolio neutral in my book is half stocks and half cash. I've been trading this and holding this for a long time. So definitely didn't participate as much in the bull run as some people did. Definitely didn't get hit as much in the sell-off from 2022 as some people did. So I'm still sitting in the neutral camp because you know what? I don't have a crystal ball. And I think anybody who's saying this is going to happen or this is going to happen 6 months from now is just throwing darts at the wall. I don't think anybody really knows where we're going here. This is a very difficult market to call because the bull thesis is, soft landing comes, inflation gets in check, and just, and everybody YOLOs just keeps going and it keeps going around. The bear thesis is stocks are overvalued and eventually this higher interest rates is going to come to roost. I don't know who wins.
Two sides
I really
of
don't
the
know.
coin, right? Always two sides of the coin. So
I'm neutral. Right now, my official stance on the market. So bears, bulls, you can both hate me for this, is I'm neutral. That's my official stance.
Bulls make money, bears make money, and pigs get slaughtered.
That's
Where'd we hear that before?
And the truth is definitely you don't want to be the piggy. But
now we're coming back and we're bouncing back.
So now, exactly. So one thing that we can do here, right, is we can just have situational awareness here. So if the markets come up today, right, the Qs start ripping back to the upside, what type of stocks would you be looking at? And if the SPY and the Qs come down today, will we see a little bit shifting into maybe some value? Is that what we should be looking for? What did you guys see yesterday when we were getting that drop, right? We saw those growth names going down really quickly. Dennis and I were talking about that towards the close, like Affirm, Upstart, Carvana, things like that. We'll see if those can keep coming down. But is it a rotation to some of the value names? Because I didn't see that yesterday. Defensive names were like kind of still down even when the market was coming down. So what do you guys think about that if we do get this downside action towards yesterday's low?
I don't know. I don't know what to think. Joel, take it.
No, I'm just looking like unchanged in stocks. I mean, as far as, calling them out individually, tech to value, I think, the stock, what we're looking at is, holding the previous, we're away from the previous day's low. If these stocks stay green, if Amazon, dips down to the close and catches a bit at the close, you gotta respect that. Google right around the close too. Previous day's highs, got to be respected as well. I don't think there's a huge underneath demand right now. If we have if we take out yesterday's low, I just see more overhead supply. I'd be more likely to tell people if you're looking to exit today, where to exit. There's nothing where we're elevated levels. I'm not saying, if UNH drops another $8 or something like that, or if ExxonMobil goes to 100. I don't think it's that kind of that market was yesterday. That yesterday when things got 50 handles straight down. So that's the way I'm approaching it.
I think you're entering a contrarian market environment here again, and that is fading moves. And we just saw it, basically in the last 20 minutes. They ripped it 10 points higher, then they dropped it 20 points. Now they just bought it back 10. You're chasing moves in this environment, you're probably going to lose money. So, I mean, you got to let the prices come to you. You can't panic in this market. I think we could be in a market where we just get a lot of chop going forward. We don't have any earnings for another week. Really, Delta's on Thursday next week. JP Morgan's Friday.
Wow.
Delta's going to be good. We all know Delta's going to be good. They've said they're going to be good. They've come out and raised guidance. Delta's going to be good. JP Morgan, Citigroup coming Friday. The banks, what are they saying? That's going to be interesting here. So could we just get a lot of chop in the next 3 or 4 days? I think we could. Could volume come down? You're starting to get the dog days of summer. So you could actually see volumes come in here a little bit. I think there's a good argument that we just kind of chop around here for a bit and try to figure it out. Do we finally, stabilize and find a point to go higher here? Maybe, but I don't think we're ripping out of here, and I don't think we're going to get killed either.
Consolidation.
That's maybe what we need.
Yeah, I mean, can't.
I could see the sideways trend maybe just going even right back to 443, staying within this range, right? We could go sideways for a good while until we get some good earnings reports, the big boys, right? Once the big boys come through, I think that's when we'll know more of direction of where this market's going, right? And
Sure.
Of course, we get like Microsoft, NVIDIA, those types of names. Those will tell us a lot about the AI bubble. All right, let's keep going. Let's go to Baba because it did have news today. I want to make sure that we get to it. This is trading higher, of course. They launched a generative AI and then also trading higher on reports of China looking to end its regulatory overhaul on fintech affiliate Ant Group with a penalty of at least 8 billion yuan, $1.1 billion by Friday. So will this actually start to turn around the story in Alibaba?
We thought the Alibaba story could turn around multiple times, and every time it starts to think you're going to turn around, it just sells off again.
Yep.
Stock from a valuation perspective is cheap. Let's go look, in our trusty Benzinga Pro. And I mean, we can bring this up here. Maybe we're going to have to figure out how you can bring up the Pro to show people how we're doing this sometimes here, Mitch. But I just go into Alibaba. I go into my details in my Pro, BABA, and you can just go grab. And I'm telling you that I just know from myself. Yeah, the forward PE on Alibaba is 9. 22 current, but they're projecting it out to be 9, the forward PE. You can go through these China stocks and you can find that
It's
these PEs,
extremely
JD.com
low,
forward PE is 12.
For a tech stock.
These things are trading at, some of them are trading at half the market multiple. Why is that? Because they're worried about Taiwan. That's the only reason. If you take Taiwan out, we've said this before, throw away the geopolitical risk, I'd buy all these China stocks. But I can't throw away the geopolitical risk. So that's why I can't buy them. And that's what the market is saying here too. So, I mean, every time it pops up, you get bag holders selling. And, valuation can say, oh, it's going to come out of here eventually. But not if they go, and if there's an invasion of Taiwan ever. these stocks really get murdered. They could fall 50% in a day. So, I mean, that's the risk. So I think, there's value here, but that unknown of the Taiwan situation just makes me too scared to buy them.
Yeah, I look at monthlies. I say once it gets to 114, but by then it's already kind of a little bit more on an uptrend. That's when I can maybe take a look at it. Right now in this sideways action and every pop that gets sold into, I'll leave it alone. What do you think, Joel?
I'm just looking at where we're trading at, and we're getting a nice pop and BABA up 289 and 86.70. I'm just trying to see if you want a little more upside here. 87.62 is a high.
I knew you would go look at that.
87.62 would be the next target. On the upside. I mean, you've already, a lot of this has been always factored in, but with the BABA, you got to be in into, like overnight, you get the good news. It works in your favor. The bad news, it works against you. But potential target on the upside, 87.62.
All right, Costco,
Market's
last
selling
one
off here. More chop. We got back to green. Chop is the word of the day, word of the week. I predict for next week. Chop, 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 chop,
flavor.
Chop. We haven't seen that. We've been in a momentum market here for a little bit. So you've got to identify the type of market. I think we're going to move from the momentum market into the chop market. That's my prediction here.
And look how long we were in the chop market before we,
a year, Joel, really, on the S&P, like 2 months solid. But I mean, really, like we chopped around for a long time from, April of 2022 to April of 2023. We went nowhere. Yeah, we had a bear market in there. We had a bull market in there. But overall, we really went nowhere. And I mean, we're right back to where we were in April of 2022 again on the S&P.
Let's be honest. It looks exactly like this, right? Doesn't it look like this? Doesn't it look like this?
And when was that?
It's April 24th.
That could repeat.
Right there. Look, double topping action around the 416, a wick there, coming back towards support. As long as that bottoming support trend line holds, that's what I'll be looking for. Similar action that happened there in the SPY. What did it do? It came back, found that support line, came back towards the resistance, got above it, came back, throw line, take it to the upside.
That looks the same. Good eye, Mitch. That's
same thing I'll be looking for. Pullbacks towards that supporting trend line, then another ride higher, then a little bit of a pullback, and then who knows, maybe we can grind up to 450. As long as we don't get back towards like that 430 mark, and I think that's a good level to look for if you want to continue this trend higher.
I think you summarized it well, Mitch. Yeah.
All right, let's go ahead.
Technical analysis. That CMT stuff's working.
Yeah, sometimes it does, right? All right, guys, we're going to wrap it up. Thank you, Joel, for joining us on the road action. And definitely, Joel, is there pre-market prep plus today?
No, there's not. I don't quite have the bandwidth to do it here. So if you want me to stick around with you for a few minutes, I can, because there's some pretty good price action.
Yeah. We'll bring you over right now. And in a second, we're going to go to live trading, but I'll start wrapping it up in a second here.
Okay. I can get my numbers here.
Yeah, definitely. What do you see at least on your ES outlook?
Okay. Unchanged is huge.
I'm leaving.
All right. Later, Joel. You see Dennis. He's going to work,
We're
baby. That's why he
on
left.
The session here. So what did you say?
Oh no, that Dennis left real quick. He said he needed to go trade. I know that reaction. He said, "Hold on, let's go have some fun."
Yeah, no, because there's some good chop action. So getting back up, green, which is also mid-range on the session. That's owners for the bulls here early. And the bears are pressing. And under that pre-market low, you got yesterday's low at 1950. After that, look out. Are you going to give me a different, are we going to stay on this stream, or are you going to direct me to a different stream?
If you want to come over, Joel, you can come over. I'll give you a link. I'll throw it up right there in our Slack here for you to just click on it. All right. So let's go over, guys, the live trading. You guys might get a little bit of some Joel content on live trading. Come over, team. We were going to talk about Costco. If you want to talk about Costco, Greg, just come over to live trading. We'll keep it going there. We still got some other headlines we can talk about. So come over to live trading. That's coming up next. Don't go anywhere, team. We got a lot for you guys right here, of course, on Benzinga. And we got, of course, another all access at the end of that. Let's keep it going. Oh, actually, you know what, team? I completely, you know what's going on here? is that I want to go trade, and I realize what I really need to go do is we got a company-wide meeting, Joel. So no live trading action. Let's just stay right here towards the bell. How about that? I'll give you guys a little bit of a bonus. No live trading. I'm not going to open that up because I'm going to get in trouble if I do. But let's get to some just talk right here before the bell. I'll tell you guys a little bit about my swing trading action and some stocks that are moving around. Joel can tell you a little bit about what he sees in the market. So if you guys have stocks, throw it up in the chat right now. Hit the like button.
Yeah, let's do some ticker time, Mitch.
Exactly. That's what we're going to do here. So first one I'll go to is like the oil outlook. Of course, I'm still in XOM. Full got in there at like the 108.50s added. I have 107.92, so I'm ways away from here. Looking to see if we can finally break this support line right underneath it. What are you seeing on the XOM chart? What should I be looking for today?
Mitch, this is one I like. If you really followed your plan here, this 102 is shaking. You can see 243, 220. 101.62 doesn't, that doesn't really mean anything to me. So, a breach of 102. I mean, don't freak out the first time when it goes to 101.80 and then bounces to 102.40, something like that. If you just don't want to touch it today, I don't think it's even right now, the way the market's trading, I don't even see it getting back above unchanged at 102.92.
All right, we'll see what happens there. Let's go through stocks from the chat. I wanted to grab them. Now they're all in there. Of course, we get Meta mentioned in the chat. This was one I was thinking about buying in the pre-market. I was going to buy it at like 291s this morning, but then I remembered, oh man, jobs data. I don't know if I want to buy it before then. It's coming back to that number now after a recent pop in the pre-market to 295. What are you seeing on that chart, Joel?
I wouldn't be buying this one. This has been too much of a dip, too big of a component to the S&Ps. The S&Ps are starting to leak here, getting some selling pressure. I would say if you're going to take a poke at this, then you just got to respect the 289. You're saying, okay, I'm buying 291 and it takes me out at 289, then I'm out.
That's what I was thinking earlier. So it seems like the very similar plan here towards the open there.
And if it got unchanged, if you did pick up a little scalp like that, boom, 91.99, kind of closed kind of weak, even though the market rallied back. So I keep an eye on that closing price, 291.99.
Nice outlook there. Let's go to another one here that's been riding high. Carnival Cruise Line, CCL.
Man.
Will they turn this cruise around? We'll see. I mean, is it going back to port or is it still have a couple to embark on? It seems like it hasn't turned around just yet, but it's definitely showing a little bit of some signs of topping here in the 19. What do you think, Joel?
Wow. 2 out of 3, 3 out of 4, 4 out of 5, 5 out of 6. You broke a little winning streak yesterday. Where you at? You're trading down. I would just be focusing on just anywhere near $19. I don't think you're going to see your 19.55 yet from Tuesday. Yesterday's high, 19.04, 18.86 close. I think it's one of these scenarios where someone's nibbling and trying to get out in the 19 handle. And, they didn't get enough of their stock done when it went to 19.55, came down to 19.04 yesterday. So maybe keep an eye on your New York open book too, to see if, they're starting to, I think you got patient sellers at 19 here in CCL after the nice run.
All right, let's go to another one here. Let's keep it going, team. You guys keep throwing up some tickers out there. Let's go to Airbnb. This is one we've been talking about lately. It's been going kind of sideways, a little bit of a pullback recently. I haven't been wanting to go for Airbnb as much as I've been wanting to go after, I've talked about it, Hilton, Marriott, Hyatt. Those seem to be like the ones that I want to go after versus an Airbnb. But what do you see on Airbnb?
Yeah, it just kind of feels like you've had a nice run, that earnings rebound here, one trading flat on the session. I think you probably have more people, natural sellers out here. You hit the high of the move just a few days ago. Actually, you hit it yesterday. No, I'm looking at the monthly here. The recent high of this rebound's been 134.27. The closing high of the rebound's been 132.35. So Even 130, I think, on just the weakness in the market. I don't even know if you're going to get a shot at yesterday's high, 129.32. On the downside here, the trap minor support at 27.02, and then if you lose that, you got a low at 23.5. So looking a little weak. It's hard for me to, when the S&Ps are, falling out of bed.
Dropping.
Right here.
Exactly.
I'm giving you more potential sells and potential buys until, of course, we get to yesterday's low. First potential stopping point, 1950.
One that I'll probably just get hit here out the gate, still not out of it yet, is Oracle. We'll look to see what happens on that one. I was looking to see if this gap can hold. So that's pretty much all I'm holding on Oracle. What do you think about this Oracle chart?
I mean, why not flip it around?
Literally the gap down, right? Yeah.
That's a scenario, right? I mean, hey, you got to use the levels as it's support, but just think about how many times that
support
until it short if you would have went long, or you got stopped out of a long if you would have went short. You got to use those levels both ways.
Yep, I agree with that, and that's something to look for. We'll see what happens there in Oracle today.
Okay, how about one more, and then I got a hot.
Let's do it. One more here. What's a good one into the chat here? For solar, PayPal.
Solar.
PayPal. Let's do PayPal. That one's a harder chart. Square has been making that move up, now rejecting PayPal's move. Also, Square just recently pulled back after making a little bit of a peak. It looked like it wanted to go to 70s. It's right back at 64. What do you think about PayPal also turning back around here? Rejected 68, like 90s. 68, almost 69. You can see it.
You know what? I'm just so this one, I'll just give you the setup on this one. Multiple lows at the 65, 70 area. And that's including yesterday, you're trading above it. So this one, when I talked to you about other stocks looking to sell, this one, I'm not whooping up on the short side. This thing's already been annihilated, hasn't had much of a rebound. So I've been looking more to, try and see if you buy this thing 65.5, 65 3/4, give it a little bit of room. But this one you may find some buyers on. So, all right, Mitch, great job here handling me from a remote location. We're down 12 3/4 handles, 44, 34 1/4. Talk about that old important low from yesterday, 1950. Keep an eye on that. And the Bulls got some work to do to get us unchanged. So great job, Mitch. And obviously, I'm out for the day, but at the close will be Josh will be there. So everyone have a great day. Thanks for being here.
All right, Joel's hopping out of here, guys, and I'm going to wrap it up here. We'll get you guys, I will let you guys know we do have a company-wide quarterly meeting, so we will not be having live trading, and we will not be having any show towards the rest of the day. But I'll tell you what, one way that you guys can, of course, keep up with all the trading action, and if you guys want to talk about some live trading action, you guys can always hit me up at MoneyMitchBZ. And, of course, I also have now, it looks like I have a Thread account, of course. So you guys can check out that Thread account. I'll be talking a little bit about my trading action on there. I'm going to be putting up more trading action on Threads. And so if you want to see more of my trading action, of course, hit that link. Give me a follow on Threads. Let's see if we can push that up. And, of course, we'll see what happens towards the market here today. I got some swing trades on. We'll see if oil can go through that 102. And I take some money. You guys know I've been talking about that oil trade. I called it on the upside, now trying to knock it right back down. We'll see what happens. Smash the like out there. We'll see you next time, team, right here on Pre-Market Prep. Hope you guys enjoyed this show. And let us know, what do you guys want to see more or less of on this show? We're always here to go ahead and make improvements. We'll see you guys like always. Enjoy your weekend. Stay safe out there. No start swing trade today at 3 to 4. I'm just going to go ahead and call it a week, guys. Like always, we'll keep working. We'll get to the next level. Got some great special announcements that will be coming next week as I go ahead and try to pivot, bring us some new shows, bring us some new content. Are you guys excited? What do you want to see on this channel? Of course, Benzinga. I'm always here for you guys and always willing to make a new show. Bring somebody else on or bring you guys some more experts. You guys reach out to me and I'll always listen to the feedback. Mitch at benzinga.com if you guys want to send me an email. and have a great one at the open. Stay safe out there. It's 9/12. I hope you guys do great, and always a processed approach. See you next time right here on the #1 place to grow your trading skills, Benzinga.